The local index was the clear winner among international indices, having gained 5.65% in the week's performance last week. Commodities were the outperformers from last week across asset classes, as we saw broad-based gains in gold, platinum, Brent crude, iron ore and copper. Precious metals have maintained their momentum over the weekend as gold trades at $1,268 an ounce and platinum is currently at $1,001.60 an ounce, having breached a key technical level. Of note was the exceptional performance of the local platinum and precious metal index, which was up over 28.11% for the week. Despite worse than expected local trade data, with the deficit widening to 17.9 billion rand in January, the rand has proved to be quite resilient, now trading at 15 rand 38 to the dollar, 16 rand 84 to the euro and 21 rand 77 to the pound. The US had a strong print in the non-farm payrolls of 242,000, revised up from the previous month's 170,000, beating market expectations of 190,000. Unemployment stayed at 4.9%, with wage inflation declining for the first time as average hourly earnings declined by 3 cents to $25.35. Looking forward at the rest of the week in local and international economic data, we have local gold and foreign exchange reserves data, business confidence index and current account percentage of GDP. Tomorrow we are expecting Chinese trade data, followed by British manufacturing production on Wednesday, with US crude oil inventories. Finally, we see Chinese inflation and the all-important address by Mario Draghi at the ECB press conference, wherein traders may be looking for further indications of stimulus measures and the potential for greater cuts to European interest rates. Finally, we have local year-on-year manufacturing production, US unemployment claims, US preliminary consumer sentiment, and lastly, Chinese industrial production to round off the week. In local share data, a number of stocks are going ex-dividend, namely Arrowhead Properties, City Lodge, Discovery and Goldfields. This morning we have results from AVI Limited, RMI Holdings and Sasol. AVI for the 6 months ending in December noted revenue up 6.5% to 6.39 billion rand. Headline earnings per share were up 11.3% to 281.6 cents, with an interim dividend up 13.6% to 150 cents per share. RMI's key highlights for the 6-month period ending in December were an increase in normalized earnings of 4% to 109.2 cents, with an increase of 2% in the dividend to 53 cents a share. Sasol for the 6 months trading period ending in December noted a decrease in headline earnings per share of 24% to 24 rand 28, despite a 47% decline in the oil price and a decrease of 18.6% in the dividend to 5 rand 70 per share. We're expecting further results from First Rand, RMB, Sanlam and African Rainbow Minerals.